Walkabout Resources' primary asset is a high-grade graphite project in Tanzania. Disclaimer. Corporate structure, just briefly. Share prices have been up and down. We're probably capitalised now at about 26 million. We have $10 million in the bank, recently raised. We have a new major shareholder with about 9%, engineering company based in China. We've got a tight board structure, a board and management structure. Mining engineer who's built lots of mines in Africa. Andrew Cunningham, geologist, 20 years experience in Africa. Evan Kirby, our metallurgist, very important to the team, 30 years experience in Africa. Topically, Tanzanian government have changed the rules. We're in discussions with the Tanzanian government. We hope to have a mining licence awarded in the near term. Obviously, that'll be our next major milestone. So why invest in Walkabout? Walkabout has a graphite project in southern Tanzania, very high grade, life of mine 16%, premium product. It's 75% above 180 micron and manageable startup scale. The capex to build the plant's 29.7 million, which we think we can reduce down to probably around 25 million. So it was a busy year last year. The last few events were we got a cornerstone investor from China. We raised $10 million through December, January, and this is all part of our development financing for the project. So logistically, we're well positioned, 200 kilometres from the coast, very good road, sealed 2/3 of the way, well graded the other third. Port of Matare, very good container port. So logistically, very well positioned. Within the resource, we have a lot of scope for expansion and increasing. We only have 40% of the reserves are measured and indicated. We can step out to 400 metres to the northeast, and it outcrops again at 30%. So with limited drilling, we can basically grow our reserve resource. So there's the pit design. You can see the high-grade zones. In the trench there, it grades up to 25 and 30%. The high-grade zones are able to give us a life of mine grade of 16%, but only down to about 80 metres. So very manageable, almost mining a quarry. So again, we have an exceptional product. We have very large flakes. 75% of our product is above 180 micron, as I mentioned. So we're getting very good basket price. That basket price is increasing, and we get very good contribution to revenue above the 180 micron level. The DFS was upgraded last year in September to account for all the Tanzanian changes. It's a robust project, a 19-month payback. It has an IRR of above 50%, NPV of 180 million. So it's a very, very robust project. In terms of our marketing, we have 3 offtake partners with their non-binding agreements. Each of those wanted to take 100% of our product. There's a German trader, there's a Chinese trader, and a Chinese producer. Each of those want to basically take all our product, 40,000 tonnes per annum. Again, we can see that the graphite price, and probably it's been mentioned numerous times at one-to-one here, that the graphite price is on the move. If you look at the market in China, the prices have significantly increased. There's the example between May and September last year, and it continues to increase. So again, with our product 75% above 180 micron, we're getting a very good basket price based on today's prices. So Walkabout is continuing to work on its graphite project by engaging engineering in China. We have done all the costing, all the design, all the diagrams. We are now working with a major group to look at financing that equipment. We're likely to finalise that in the near term, where China will finance all the purchase of the equipment on a deferred payment basis. We obviously, once we get the green light from Tanzania and the mining licence, we press the button on securing binding offtake agreements. And we also have down the bottom there some exciting Namibian lithium exploration ground and Northern Ireland exploration ground. Just to explain that, we have signed the heads of agreement with the Jingpong Mining and Machinery, and they're doing all our engineering work. They are also our major shareholder. We are working on deferred payment for all that equipment out of China, so they'll source up to 80%. So the differentiating investment case is it's a very high grade, 16% life of mine, low operating cost, low startup capital, exceptional product in terms of flake size and expandability, and high, for that reason, a high basket price. Obviously, because of our expandability and our large flakes, we're not necessarily dealing in the battery market. We have demand from Germany for specialty parts and foils and fire retardant products, which is a growth area which looks like it's going to expand from 1 to 2 million tonnes per annum. As mentioned, we now have some exciting lithium exploration licenses in southern Namibia. You can see the red, which are outcropping pegmatites. We've just picked up the southern licence there, so now we've got 2,000 square kilometres. We've got 90 kilometres of line kilometres of pegmatites, and with historic lithium occurrences. So we're about to start an exploration program on that. Recently we picked up 100% of Lonmin's Northern Ireland operation, and again that's multi-commodity, it's gold, base metals, lithium, and we are about to start a exploration program there. We've got geologists working there at the moment. And in terms of our joint venture, we've gone on beyond the Lonmin deal to secure a joint venture with COSA, where we're basically looking at the gold joint ventures in Northern Ireland in the Dalradian Gold Belt. So some exciting exploration to come while we wait basically for the mining licence from the Tanzanian government. Obviously we just met with them, so we think that that's probably imminent in the next month or two. Thank you very much.